And that is why today I am announcing this government will make a new free-of-charge digital ID mandatory for the right to work by the end of this Parliament. Let me spell that out. You will not be able to work in the United Kingdom if you do not have digital ID. It's as simple as that. Because decent, pragmatic, fair-minded people, they want us to tackle the issues that they see around them. And of course, the truth is, we won't solve our problems.
The radical left Democrats want to shut it down. I mean, it's up to them. We have a great economy going. You saw the numbers yesterday. They're fantastic. The economy's doing well. Prices are down. We have virtually no inflation. Everything's going good. We're respected by every nation in the world. And you know what happened? The Democrats want to shut it down. And they want to shut it down because they want to give billions, ultimately trillions of dollars to illegal migrants, people that came into our country illegally. Some of those people are criminals, but they came into our country illegally, and they want to give them the essential over years, trillions of dollars, and our people aren't going to stand for it. They also want to have open borders. They want to have men and women's sports. They want to have transgender for everybody. These people are crazy, the Democrats. So if it has to shut down, it'll have to shut down.
Well, sir, I mean, if the shutdown's a week or two, and that's probably the most likely scenario, and that's probably what investors think is going to happen, appropriately so, then, you know, from a macroeconomic perspective, a market perspective, no big deal. I mean, obviously, it's a big deal for the government employees that are furloughed or fired, but from a broader economic perspective, not so much.
What about this idea of a data blackout and how that would leave a Fed that is very much data dependent in the dark?
Yeah, well, it's not great, and this is a particularly bad time because we're at an inflection point in the labor market. The job market hasn't created any jobs over the past few months. We lost jobs back in June, and that's before revision, so, you know, it's a pretty inopportune time. And, of course, the Fed's got to make a decision about interest rates at the end of October again, so not great. But, you know, again, if it's a week, you know, 2 weeks, any longer than that, then it becomes a real problem. And then I think investors will take notice.
Convenient. The four of us have been doing this for some time. I refuse to play the shutdown game. It doesn't matter at all for markets. It barely matters.
If we don't get a jobs number or CPI?
No.
If data collection in October stops?
I will not do it, sir.
Oh, wow.
It doesn't matter. It mattered the first time. It has not mattered since. I mean, the first time back in the Obama era. How many times have we've been told the shutdown's coming? Everyone gets paid retroactively. Yes, you probably can't go to a park for a minute, and it's terrible if you're vacationing. But for the broader market, obviously, if you rely on government expenditures, maybe there's an interruption. But for the broader market, it doesn't matter.
How about the tariffs?
Well, those certainly matter. We got new data today. Goods within the report that are more likely to be tariffed are going up more than elsewise. But to Sarah's point earlier, we've done really well here. There were a bunch of us that were telling people, if tariffs go up by 25%, that doesn't mean consumer prices go up by 25%. There will be some burden sharing between exporters, importers, to consumer, and that's what's happening. And when even the Fed chair is telling you tariffs, inflation has not gone up as much as we thought, for lack of a better word from the market standpoint, that's a success.
Is this unusual, Eunice, or is this the way things typically go? And we shouldn't necessarily expect that there's going to be some sort of formal announcement.
Right. Right. It is definitely the MO of the Chinese government. They don't necessarily want to confirm anything because they're able to give themselves a way out, you could say, because up until now, they've been saying that they have agreed to a basic framework consensus. But if they don't confirm that there's a deal on the table, then they can say, well, you know, we never agreed to this deal. So there is like an MO that goes on with the way that Chinese operate, and it could be a way that they're trying to gain leverage on the Trump administration in broader negotiations. I would say that there's another potential reason, and that is that the Chinese government has to think about what the Chinese public thinks. Because for the past several years, we've been hearing, the Chinese government is definitely never going to sell out ByteDance or TikTok, or we will not sell out any Chinese company. And now it's looking like they might be conducting some arrangement that would allow TikTok to go.
Welcome to the Crypto Teacher.
Don't forget to like and subscribe to the channel.
And you know I come back with that video just to make you think. And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have digital ID mandatory to work in the UK. Yes, you heard that correct. And we know that's biblical. And a lot of people say, what's the big deal? Your ID is just going digital. They have no clue. Because then your money is becoming digital. You're going to have a digital twin. You're going to have AI agents working for your digital twin. And then if AI agents are programmed to only deal with other AI agents, they're only going to deal with your digital twin and not actually you. I know it sounds like a movie, but remember, your life is an illusion and TV is your reality. This is just another step towards the metaverse, the virtual world where your real life will become a video game. And remember, the Crypto Teacher told you. And we have Trump says Democrats are responsible if the government shuts down. And we know that's nothing but the Hegelian dialectic. But if we do shut down, we know why they're shutting down. That's to flip the switch on this new financial system. And the people have no clue because they keep talking about shutdown every single year. The people are just going to say, oh, this is just another shutdown, but really, they're doing ISO. And remember, the Crypto Teacher told you. And then also, we know if they do a shutdown, we know the drums are even closer, so the drums are going to get louder. So all thing we have to do is sit back, get our popcorn, and let it play out because this is definitely a movie. And if you're a part of the Patrons, I put a new video in there for you to watch so you can see that your whole life is staged. And remember, the Crypto Teacher told you. And then we have China has not confirmed the TikTok deal. And at that $15 billion valuation, that's the reason why we still haven't gotten all the details on it. But we know all about Oracle, and Oracle's first deal was with the CIA. And remember, the Crypto Teacher told you. And then we have the Fed. Yes, guys, they did a rate cut, but now we get inflation data. Inflation is still high. We're going to be in the 3% range. How do we know that? Because Jerome Powell clearly told us that we're not going to get to this 2% goal until 2028. And what does that line up with? That's right, the fourth industrial revolution, universal basic income. And by that time, majority of the machines would have rolled in. And remember, the Crypto Teacher told you. And we have the bond market is telling us that no one wants this long-term paper. All these other countries are making their way off the dollar. The fact is the central banks are holding us up, and the only thing you have to do is look at gold and silver prices. And the central banks are buying it up because they know the dollar, the fiat dollar, is dead. Yes, the stable coin, United States stable coin will be here, but we're going to a cashless society. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
It seems sort of stuck, and this sort of limits what the Fed can do because they still have to be vigilant on the inflation front, correct?
The biggest problem that lower to middle income consumers have is the cost of living. And with the 2.9% core PCE, an effective Fed funds rate now at 4.08, and in the dot plot, a long-term 1% real rate, they're basically there. Give them one more cut, and they're at that 1%. Now, that means that if they're going to cut further from there, inflation has to decelerate, or if the unemployment rate starts to rise and they say, you know what, a 1% real rate needs to be a half or a zero. So this, I think the market got carried away with what the Fed's going to do under Jay Powell. Now, once he leaves, all bets are off and they can do anything. But at least through May of next year, I see maybe one or two if inflation's still stuck at 3%.
So just to extrapolate that, that would imply that there is a disconnect between market expectations and what the Fed can actually do given the situation they are in. And so therefore, we are due for a pullback? I mean, is that sort of is that the bottom line here?
Well, if you look at the two main factors for the stock market rally, the AI tech trade got a second wind, and the Fed's going to cut, you have to buy stocks, particularly small mid-cap, which played catch-up. So I do think if there's going to be a reason for the pullback, it's the AI tech trade that's exhausting itself. I think Oracle was a good example of that on that one-day spike, and it's down 50 cents, and the realization that, yeah, maybe we're, and I refer to as a rate tweaking cycle rather than a rate cutting cycle.
I read you religiously. Beginning of the year, you said the data this year is going to be lumpy, messy. It's not going to make a lot of sense. Tim mentioned consumer spending was robust in August, in a word. The unemployment rate seemingly going the wrong way. I mean, there's a lot of things here to parse through. But to your point about inflation, is the bond market back on its horse like it was last September?
I think we have the early signs of it. But you also had this week, you had multiple Fed members saying, hey, wait a second, market. We're taking this meeting by meeting, maybe 1, 2 tops. So I think there's an adjustment there. But yeah, 3% is much different than 2% inflation, especially when you compound that and what that means for yield interest rates across the curve.
So where do you think real rates should be?
Well, I'm always of the belief that interest rates should be above the rate of inflation. The Fed thinks the long term should be 1%. Great financial crisis, it used to be 200 to 300 basis points. So if you look at Steve Myron, he thinks they should go to 0 right now. That's quite extreme. So I think we have a healthier economy when we have positive real rates. And right now, it's about 1%-ish.
Indeed, and we might be hovering below a key level at 4.25%, but we're well above a very significant level, 4%. If we look at this morning's data, one thing that really stuck out, we indeed did have strong personal income and spending, as you were just discussing. But taking politics out, inflation's sticky. I don't care who caused it. I don't care to put a blame on it. All I'm saying is, if you look at it over the haul for the last year and a half, it really hasn't done anything to remain closer to the 2% target. Let's look at year-over-year core PCE inflation. It came in at 2.9 today. That's basically a 5-year chart. You can see the right side. Not only is it well above pre-COVID levels, but it's holding pretty much at slightly below 3%. The target's 2%. That alone should give the Fed a bit of pause in terms of any type of aggressive easing strategy unless the labor market really deteriorates. But as we learned yesterday, 218,000 on claims was pretty tame.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology, and I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. And we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming, while everybody's sitting at home, get on stocks, the Seaver, the biotech stocks, and while everybody's at home wishing they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team Save the Village. Part 2. King Joshua and Drama Team Save New York. From COVID-33. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.